Louis Fed President Jim Bullard joins us now, and I'm so excited to speak with you, Jim, because right now I'm looking at all of this data that suggests a really strong U.S. market, a really strong U.S. economy, people continuing to be able to spend and their incomes rising. What about this picture makes you think that the Fed needs to be cutting rates more aggressively?
Yeah, thanks for having me. So these numbers look to me like they're consistent with what markets were expecting. I think markets have a reacceleration hypothesis, and I'm sympathetic with that. So I do think the economy will be in pretty good shape for the rest of this year and into 2026 as some of the new administration policies come online. On the inflation side, there was no surprise here. So that seems to be very consistent with the committee's story that they'll be able to look through inflation and then expect it to fall in 2026. So I think this leaves everything on track to have further rate cuts during the next two meetings of the FOMC.
Just to put this into perspective, this is what the market was expecting. And so there is this rally across the board as people say, OK, the Fed can keep cutting, even though you are seeing this strength and potentially reacceleration, Jim, as you were putting. Yet year over year, core PCE, that key metric that the Fed looks at, is at 2.9%. It's not climbing. It might even be going down to 2.8%, but it's still almost a full percentage point above 2%. Is there a feeling that it just isn't really important to get it down to 2% that quickly, and so you can look through that?
No, they do want to get it down to 2% over the next 2 years. So you want to asymptote into 2%. I would say not go very quickly to 2% or go under and overshoot. So I think usually the way this is thought about is that you want to gradually bring it down. I think the committee's on track to do that. And so that part looks pretty good.
So is the committee almost looking through inflation? Have they been given the green light by the Fed chair to look through if there's going to be any hot prints upcoming when it comes to inflation?
Yeah, I do think that the chair, Jackson Hole, very much signed on to the idea that any inflationary effects coming through the tariff channel would be smaller than previously anticipated, and they're coming later than previously anticipated. And so because of that, this is basically a look through. So even though you say, like President Barkin said, well, it's not getting any better, for those that thought there was an important tariff component to inflation, that part should go away since that's a one-time effect. And so that's giving the committee confidence that they can go ahead and get to closer to neutral. They'll still have still be a restrictive policy, still putting downward pressure on inflation, but not as intensely as what they're doing right now.
Well, when it comes to inflation, we heard from Governor Myron almost insinuate, not right now, but maybe in the future, the Fed should actually have more of a range in terms of their target. Could you see the Fed moving towards that, maybe targeting 2 to 3% instead of just 2% across the board?
Yes, a classic issue in inflation targeting. The U.S. has come down on the side of just having a target. It's simpler communication. It doesn't leave ambiguity around having a range. One of the problems for countries that have had ranges is that, the top of the range then becomes okay as opposed to the midpoint of the range. So it can be interpreted as slippage in your commitment to keep inflation low and stable. And households do not like the inflation. So I think it's incumbent on the Federal Reserve to make sure inflation stays low and stable.
Jim, I'm trying to get a sense of how a data-dependent Fed deals with the potential of not getting data. Next week, we're supposed to get the non-farm payrolls report on Friday, October 3rd. Ostensibly, that could be after the government shutdown, where we do not get that data print. How problematic would that be for the Federal Reserve, given how balanced right now a lot of people feel the risks are?
Yeah, well, it's disturbing to not get as much data as you can on the state of the economy, and so that would be a concern. But the Fed has managed through that in previous episodes around government shutdown. So I think it's manageable, but it's not an ideal situation.
It feels like a really messy moment because not only are there questions about the integrity of the data, when we get the data, which data to look at, what the data is measuring, but there are these sort of sea changes that are overlaid on top of it, whether it's different areas, different income earners that are earning a lot and able to spend, lower income workers that are feeling the pinch of inflation and not seeing the same types of labor gains. I just wonder if the Fed should think of a new paradigm, a new benchmark to understand exactly what the optimal employment level is and how they should weigh these two risks.
Yeah, I do think it's a good time to review our models and think about how are we going to do this over the next decade? Could we do better than where we've been? I think we've been more or less preoccupied with the pandemic and the reaction to the aftermath of the pandemic, but that's pretty much behind us now. So now would be a good moment to really do a thoroughgoing review of how the Fed operates and how the models work. I guess one thing I'd like to do is have I'd like to do what other central banks sometimes do is have a parallel process where you have a new model getting ready and run that in parallel, and then have a cutover point at some point in the future where you actually switch to the new model. So I think we could do things like that, and that's maybe something to consider at this point.
Governor Lisa Cook is warning, her attorneys are warning that the removal of her could cause chaos and disruption in financial markets. What do you think the reaction will be in financial markets if she is removed?
I think that the court will insist that she gets due process for whatever charges have been made against her, so that that would prevent political partisans from just making charges against members of the committee without having to prove those charges, and then calling that cause and allowing people to be dismissed from the FOMC on that basis. So I think that the people on the Supreme Court will make the justices will probably come down in some way to protect that due process clause.